Wall Street mixed Friday afternoon after four straight down days. Let's check the markets with Jimmy Chang. He is Chief Investment Officer at Rockefeller Global Family Office in New York City. Good afternoon. Happy Friday to you, Jimmy.
Good afternoon.
Thank you. Well, Jimmy, what's behind the choppiness today?
The movement has been so small, right? Even the last few days of pullback is just tiny amount. And we'll see if it breaks the 50-day moving average, because so far in the last 6, 7 months, every time it gets down to the 50-day moving average, it bounces back. It's been a very resilient, Teflon market. Well, I think in the last few days, you have seen the market is trying to decide whether good news is actually, bad news is actually good news for the market, because, we are getting softer economic data as a result of COVID affecting the service business, the pace of, recovery. And at the same time, we're seeing weak auto sales due to supply chain disruptions affecting 3Q's GDP. We saw the Atlanta Fed's GDP Now model has brought down the forecast for the current quarter's growth from 6.2% that was forecasted in mid-August down to now 3.7%. But on the other hand, people are also trying to decide, does the weaker data mean that the Fed may hold off on announcing tapering? So it's kind of back and forth right now.
And today we got producer prices rising 8.3% in August. That was the biggest annual gain in nearly 11 years. Earlier we had data about job openings, the spike in job openings at the end of July. Is inflation heating up fast enough to entice the Fed to move up its timetable for reducing bond purchases?
I do believe there's now more dissension within the Fed. You're hearing a number of district presidents voicing concern about the pace of inflation, while the consensus is still that it is transitory, and indeed those hotter elements due to supply chain disruptions may be viewed as transitory. But this thing can drag on well into middle of next year, and it's really hurting consumers. And we're seeing buying intention starting to weaken because of higher prices. So I do think the Fed may feel a little bit of urgency in terms of starting tapering at some point before year end.
Well, how then should investors play this news? You talked about slowing economic growth, which a lot of investors say, well, and with the Delta variant, then you should bet on tech stocks. On the other hand, you're talking about rising inflation, which some people would say would go well for value stocks. As a strategist, how do you see it? How should investors play it?
Yes, it's a mixed environment. I think this, demarcation between value and growth misses the point. At this point of the cycle, I think we're well into mid-cycle now. It's really time to focus more on quality, on consistency, on good balance sheet. And in the face of rising inflation, I also think some of the potential inflation beneficiaries could also work. So it's not a simple call between growth or value. It's really trying to find the best, the quality names from each side.
When you say potential inflation beneficiaries?
For example, financial services, I still think could benefit should interest rates start to rise. I think some of the commodities plays, some of them have been lagging of late, but I do think the commodity complex faces multi-year of underinvestments, so potentially they could do quite well in the next few years.
You were saying earlier, good news is bad news often for this market. The market seemed to be able to brush off a lot of bad news. What do you make of that?
Yeah, I still think it's just the liquidity. There's just so much liquidity in the system. It really doesn't make sense that the Fed is still buying $120 billion of assets each month when we have more than $1 trillion of money parked at the Fed in reverse repo every night, not finding a place to put the money. So there's just so much liquidity still in the system, and there's still a lot of interest coming from the retail side.
And Jimmy, this market hasn't had a major pullback since October of last year. This is fall, traditionally a sort of touchy time for the markets. Do you sense a major pullback or a correction coming, say, this month or next?
It's always difficult to time the market, but I do sense I'm worried about the quiet one, right? When it's really steady and not making any noise, it tends to surprise us at some point. So I do suspect that it will get choppier, especially once the Fed starts the tapering process or with an announcement on what the actual plan, the timing, and the pace. And people will kind of recognize that the macro backdrop is changing to be less supportive.
Okay, thank you, Jimmy. Leave it there. Our thanks to Jimmy Chang of Rockefeller Global Family Office. I'm Fred Katayama in New York. This is Reuters. Have a wonderful weekend.